Welcome back to the channel. CPI data is out and it's absolutely crazy. Inflation is out of control yet again, and recession fears continue to sweep retail investors. They are getting led to the slaughter, in my opinion, because they are only seeing the bad in amongst all of the good that is going on in 2022. Let's dive into that in this video and just calm all of those nerves. Let's look at the perma bull, the macro picture. But before we do, huge announcement. End of this month, I have the best economist in the world coming to speak here on the Gold Coast. It is none other than Phil Anderson. So if you want to attend, make sure you leave your email address. Link is in the top of the description. That's to our fortnightly newsletter. You'll be on the list for that, and we'll post out when the event is ready to go with tickets. It's going to be on Friday, the 29th of April, so keep that date free. All right, if you haven't already, hit that like button, subscribe to the channel, bell notification icon, do all of the checklist before we start watching a YouTube video, which is, I know, a pain in the ass, but here we are. Let's dive in. This is what we're going to go through today. It's going to be a little more easygoing than other videos because the fear is out there. We don't need to be crushed more heavily with all of the fear of inflation and recession. It continues to circulate. The doomsday channels absolutely love it. They're getting a ton of AdSense from this. So what we're looking at today, inflation, Fed has shrunk balance sheets. This is all the worrisome news that's come together, at least in 2022, in the last 3.5 months. Fears of recession. Every year we hear about it. Food shortages are getting more real now. Even in China, it's coming through to the US. And then, of course, we have Biden playing the blame game with Russia. Now, this all leads to the wall of worry. Regular viewers of the channel know we look at this time and time again. And if you follow it for long enough, you can really see how this plays out in the human psychology, which then plays out into the markets. Last thing we're going to look at is the history. 2015, 2016, and 2018, 2019. Look at some patterns that are occurring through the stock market and that we're seeing play out potentially again. Starting with Bitcoin. Now, the update here is that Bitcoin has dropped to the underside, but found some short-term support. It's needing to reclaim $40,600 as soon as possible. Some reasonable volumes come in, but nothing that is really going to send us to the moon at this stage. Now, if we hang out here too long, then it's probably likely we're going to drop further down, looking at 37,500 as the next support level before tackling those other two lows that we had at 33,000 and $34,500. So we really need to reclaim that 40,600. Now, looking at the high that came in. So we're going to be looking a lot at market sentiment, fear and greed, the FOMO, the FUD, all that sort of jazz that always goes on in the market. And we're seeing a lot of fear at the moment. And then what tries to happen in the news is they try to create a macro fear cycle. And at the moment, it's not really working. Now, we can see that in the S&P. I've got this on a monthly chart. We're going to look at it macro because we need to understand where some lows are potentially going to come in and give us an opportunity to basically fill our longer term bags. But in order to fill those long-term bags, we have to do it within the fear cycle. There is no way of filling those bags at low prices without the fear. Low and fear always come together. Check out the lows in history of the S&P. We had the COVID crash low. The recent low that we see on the market was, that was February, so that was Russia invading Ukraine. The talks of World War III. What happened to that? We had World War III hashtags trending in Twitter just a few weeks ago, and now we don't see anything to do with that. You can just do this all the way back through the market, going all the way back to March 2009, which was the low after the GFC crash. And so the cycle at the moment is obviously in a macro bull market. We're heading up. We haven't broken down any major structures at this point. However, within that cycle, we're seeing a lot of bearishness. So before we come back to the chart, a lot of bearish news that's out. China's Twitter appears to be censoring content about food shortages in Shanghai as residents struggle amid a harsh COVID-19 lockdown. People are going through some real shit, but the markets are telling us a different story. So this is really hard to wrap our head around at times. It's the emotional, the real personal side of what's going on in the world. And then there's the investor side, the side that doesn't care about emotions and is there to make money. You're here on an investment channel because you want to make money. If you're looking to look after these people, then that's a different story. You got to go somewhere else, work on it a different way, or try to make as much money as you can in order to help people the way you want to help them. But we really need to separate those two. And what the news does is try to bring those two together as often as possible. All of the shit we see online, YouTube, Twitter, news events, it just tries to merge the emotions with the investment side of things. But you really need to separate them in order to succeed in this space. Restrictions are banning residents from leaving their homes in China to buy essential items. So they're running out of food. Like this is very emotionally written, and that is terrible. You can't even leave your house in China to go and buy food, or at least in Shanghai. Putin tells the Western countries their sanctions will lead to food shortages. So they're playing the game here at food. In 2020, we had the health crisis, COVID. It's something that could affect everyone in the entire world. What's happened since then? Well, most people I know have had COVID at least once or twice. They're still alive. Sorry if other people have passed. Not everyone survives a flu. We have to put that aside again in terms of the emotions. But in terms of the flu, they hit everyone with the health. We're looking at what the sentiment is trying to do. Health. Everyone's going to be affected if you don't do your part, do the right thing, as the old saying was then you are literally trying to kill your neighbors. Next, they come at it with food. They come at it with energy. We have oil prices spiking as well. So if we can't get enough oil, then how are we going to live to power our homes? Essentially, there's just a whole lot of fear over and over again. And it's really starting to try and target the essentials that are essentials to our life that keep us alive. Whereas before, through 2018, 2019, the market was just heading straight up. All we heard of was pretty much good times. So this was before we fell over the cliff from February into March of 2020. We were just heading up in 2019 and, that early part of 2020. Things were absolutely amazing. And even in January of 2020, Trump went out and said something along the lines of, this is the best economy we've ever created. Everything is going to be fantastic. Just a few weeks later, market goes into one of the biggest crashes it's had in a very long time. Let's take a look at the bigger picture. We can see all of the fearful news headlines. I'm going to jump into this and just say I'm a bull in this case, especially when the fear is there, because fear doesn't bring in tops. Tops are always in the market. Tops come in when there is a lot of excitement and a lot of greed. Just take Bitcoin as an example. We're here on a crypto channel. Look at the October and November. That was a huge excitement. If I spoke any bad words about crypto, I was absolutely ripped apart. And that's at the tops. That's when the people should be selling. That's when we should all be selling. That's why it's so difficult to sell at tops, because it is only good news. And you start to see it rise up, and there's good news, and then the market pulls back and you think, I'm going to buy more. And then it sort of only rises a little bit more and it starts to roll over. It's the same as 2021 in April and May. We just had only good news coming out so much until the bad news came in and the cycle was pretty much turning at that point. You can see May was extreme greed, yet the cycle had already turned. You can see it was a lower high, and then the crash came in. And then after the crash, we have to go and find reasons for why this happened. So at the time, good news. At the time, we currently see right now, we see mostly bad news. If you disagree, let me know in the comments down below. But that's pretty much what I'm seeing across all of the media outlets, the news, social media, inflation, recession, yada, yada, yada. So how is this actually helping my investing? Well, because I can see that, and because I'm looking at cycles, the previous, the history of the market, plus our 18.6 year cycle, which we'll talk about more with Phil Anderson at that event. So make sure you get your email address in the top of the description here. There's a link there to go and drop your email address. The overall cycle is still up at this point. Tops don't come in when there's a ton of bad news. Take a look at what we could be seeing now with this bad news and how the market is just going sideways. So I've got a couple of squares here, a couple of areas circled from 2018 into mid-2019. So it's about 18 months. Essentially, you can see that it is sideways. Now, if we get rid of the data from what we're currently at and just look at that section of the market, you can see that it was pretty significant at that time, going from nearly 3,000 points down to 2,300 points. So, do some quick maths, 20 odd percent of a drop there. And this lasted many months, 18 months. So what do you think the news was doing all through that period? A lot of bad news. We had the bad news at the end of 2018, market drops. as you can see from history now, some of the best times to buy. Sure, we got this Black Swan event and there was one extra time, one good period to buy before the market absolutely skyrocketed from that point. Just another quick example further back, 2015 into 2016. So about 12 months here, looking at May through to where it broke out again in July of 2016. So again, have a lot of bad news through here to try and push the market down. Could only manage a couple of swings down over the course of 1, 2, 3, 4, 5, 6, 7, 8, 9 months before the market basically recovered and then bounced away from that point. So these weren't recession periods. However, they were sideways periods in markets which provided fantastic opportunities for longer term investing. And so what if this is what is occurring now? What if we're seeing something like this play out at the moment? Another bounce down, maybe we get another bounce at what we've been looking at here on the channel, a significant low to come in Q3 or Q4 of 2022. At least I think there's going to be some sort of significant low in the next, in 2022. Maybe it extends out into 2023. We just don't know yet. But we'll probably get some good opportunities for loading up those bags, even though we're seeing a whole ton of bad news. Food shortages, Putin saying that the sanctions are leading to more food shortages, the energy prices increasing, 80% of Americans worried about a recession hitting this year. And you have to ask yourself, how is this even possible if there is an employment shortage? There is a shortage of people to employ. The employment figures are so low. How is this even going to happen? Businesses are cranking at the moment and they are looking for people to fill those positions. And so this is just media throwing more jargon down our throats. US inflation climbed to 8.5% in March, highest rate since 1981. Yes, this is all true. These are all facts that are true, but the market continues to tell us something different. So the Bitcoin and crypto crash fears are probably just that. Taking a look at Bitcoin, yes, this market could fall to any of these support levels down below. No one knows where this low is going to come in. But what we're seeing for the macro picture is that there is a lot of fear and the market is, in a sense, struggling to drop any faster or any harder than what it currently is. So thanks for sitting with me through my rant about the media. I look at it day in, day out, and I see it across YouTube titles, and I guess I shouldn't let it affect me in that way, but I just want to warn people that a lot of this stuff is pretty much going to be pushed by the wayside when we look back in a week's time, a month's time, maybe even 6 months' time. It's all just going to be noise, water under the bridge, like we could see with the wall of worry, which we've looked at so many times on the channel here. Essentially, the wall of worry, markets climbing in a bull market and in that direction, up and to the right, with all of the bad news in the background. And then when major lows come in, that's when we see the most amount of fear enter the market. But at that point, most of the sellers are basically dried up and the market is ready to reverse and head up into the next stage of the cycle. And this is talking a macro sense, which is why we might not see the prices rise at the moment, because it takes time for markets to hold their position, consolidate, and then start to move a little higher. That's been my position here on the channel for years, looking at a macro bull market. Sure, we do have short-term bear markets within those macro bulls, and different cryptos or different assets move in different ways. Shitcoins, they're probably going to get absolutely destroyed. The majority of altcoins, probably best not to be holding, and I've talked about that all through 2021, getting ripped to shreds about saying all these different altcoins will get absolutely crushed. All we have to do is go back to look at charts. So if you're interested in learning more about charts, check out the link in the top of the video description. That's to Patreon. And of course, we also have TIA Premium with full trading courses available over there. Now, if you made it this far in the video, thank you so much. Don't forget to hit that like and subscribe to the channel. Link in the top of the description for your email address so you can get first dibs to the event with Phil Anderson and I. And I'll leave a video right here, right now, for you guys to go and click on straight after this and watch the interview I did with Phil. Till next time, have more fun to get more done.